Okay, I want to make this video because I want to talking back about the exercise P12.1 that we did last 2 weeks, and you guys did send me some question, and some of that question is related about the share price or the preferred dividend rate. So okay, today I'm going to explain it again, and I already have the result here that we already made. I'm going to explain step by step. Okay, firstly, we issued 10,000 shares with 8% and 1,000 Hong Kong dollar per one share, but that is preference share. And the second one is 500,000 no par ordinary share with a stake value of 20 Hong Kong dollar per share. And here is the following transactions that we need to make because it's already complete during the first year. So here I marked the blue one, this one is ordinary share, and the red one is preference share. And why? Because ordinary share and preference share is the different kind, and it also have different value in this one. So we're going to separate them. So that's the reason why I marked them to make sure that we don't make a mistake. This 8% is the preference dividend rate. Okay, so how we calculate the annual preference dividend? We just need to take this percentage time with the number of share, and then time to the par value. Then we will know that's how much should we pay for annual preference dividend. But here we don't have to do that, so just make a preference in your handouts. Okay, so we turn back to this exercise. We go on the first. It's January 10. So issued 100,000 ordinary share for cash, 48 Hong Kong dollar per share. So what are we gonna do? We're gonna do here first. We calculate the cash that we're going to receive. It's from 100,000 share and time for $48 per share. So we got 4,800,000. And the second one is the share capital ordinary. It means the original price that we issue from that 100,000 share. So that would be equal to 100,000 times 20. So here we got 2 million. And you can see that 2,000,000 and 4,800,000 is have a gap between them. So the gap that we call is share premium ordinary, which would be equal 100,000 times 28. Okay, so and go to the second one is March 1st. Okay, here they said that 5,000 preference share as 1,050 per share. Okay, but preference share, the original price would be 1,000 Hong Kong dollar here, as we see. So how do we receive from cash? Cash will be equal 5,000 share times to the price that we issue is 1,050 per share here. So that's the reason why we have 5,250,000. And about the original price, you just need to take that 5,000 times for 1,000, then you get the share capital. But this one is for preference share. Okay, and for the second part, they're asking to post to the equity accounts and using J5 as a posting reference. So As you know, after we journalize the transaction, we must posting on the ledger. It means we do the T account to post. Okay, so first we need to determine that how many account that we have in here for the equity section only. Here we have cash, share capital, ordinary, share premium, ordinary, share capital, preference. Okay, and this also have share premium, preference. But which one belong to the equity? Of course, that you already learned that the equation that assets will be equal liability plus for equity. So in here we only pick up which account that belong to equity. That's the share capital. Yes, for this one. We are not pick up cash because cash belong to assets. Okay, so we're going to do is list out all the amount that we already done in the part A to here. First, we can do share capital. Ordinary. Okay, here. First we have January 10. And sure is on the credit side. 2 million. Second one is let's see, April 1st, 360,000. Okay, then is May 1st, 1,600,000. Then August 1st, 200,000. And the last one is September 1st, also 200,000. So what's the total amount here? You can see here the new pattern would be $4,360,000. Okay, that's the first one. Let's do the second one. Bring it here, mark here, share capital, premium, preference. We also doing the same thing. we find here. First is March. It's also on the credit side. March 1st, 5 million. And then is November 1st, 1 million. Okay, pattern here is 6 million. Since you're already familiar with this, so I will do it faster a bit. Sure. Share premiums, ordinary. Okay. Share premium ordinaries. Launch slow, doing the same thing. 10, 2.8 million. April 1st, 560,000. And then is May 1st, 2 million. August 1st, 120,000. September 1st, 300,000. Okay, let's see, did I count drawing? 1, 2, 3, 4, 5. Okay, enough. Here the balance would be 5,780,000. Okay, the last one. Share premium first. Okay, we just need to list out all of the amount that we was made in the part A. In this part, please double check with your transaction, because if you put in wrong side, it's maybe lead to the wrong number. So be careful with the debit side and credit side. March 1st, we have to here either 250,000, and here is 60,000. So the balance would be 310. Okay, so for the final report, I'm going to pick up those numbers from this T account and put it here. You can double check here the share capital preference. Here I have 6 million. Here. Okay. And the second one is just share capital ordinary. I also have 4,260,000. And the third one is 5,780,000. And the last one is 300,010. Okay, so the total share capital that I have here is 60,400,050. Okay, so just send me if you have any other question.